Welcome to another episode of the Financial Armor Show. My name is Brad Cooper, the host of your show and also the president of Cooper Financial Investments. I want to also welcome our amazing co-host, Tony Shore. How you doing today, Tony?
I am doing great, Brad. Great to be
Good.
here. I'm excited about the show today. This is going to be a fun one and an exciting one. And you might say, how could taxes be exciting? We're going to talk about taxes. We're going to find a way. Brad, you always find a way to make the show interesting. And it is important that we learn about this. So that's good, right?
Absolutely, Tony. It seems like a lot of the topics we pick is, not so fun topics, depressing, discouraging, but, we're going to talk about taxes and really what's even more important, being proactive, what you can do today to prepare yourself over the next 10, 20, 30 years where taxes won't be as big of an issue for you. But, how was
Sure.
your weekend, Tony?
Oh, it was great, actually. We had great weather. I was up in Minnesota with my family, and we had a couple of days where I hate to tell you and all our listeners who are currently in the area that the temp was in the mid to upper 70s with a cool breeze and blue skies. So I really enjoyed my weekend. How about you, Brad? You
Well,
look like you got some sun.
yeah, thanks, Tony. I think we just lost 1,000 listeners.
Yeah.
Well, here in beautiful, hot Arizona,
Yeah.
I hung out with the family. We spent about an hour or two in the swimming pool, and just what do you expect?
Yeah.
Summer in Arizona, hot.
Yeah.
But
Hot.
like I told you earlier, it's a dry heat, Tony. So it's really
Right.
not so bad. Come on down.
Right. It's a
It's gonna
dry
feel
heat.
it's gonna feel like 70 degrees in Minnesota. Trust me.
It won't. I've been in Phoenix when it was 114, and I said
Wow.
nope. I'm going to wait until January to come back. But that we were joking before the show. It's like the temp there is 110. The actual temp 110. The feels like is Hades.
Boy, so true. You know,
Right?
you just
HE
made me
double
think,
hockey sticks is the
boy,
feels like temperature.
and that is so true. I just thought about the actually second time I ever been in Arizona. This is going back probably 20 plus years ago. Uh, from the Midwest, from Missouri originally, but
Sure.
had a conference out here. It was in August, the first part of August. So I brought my wife's uncle, who at that time was working with me, and we came out to a conference here in the Phoenix area. So we decided to come out 2 days early, Tony, because we love golf.
Oh yeah.
So, you know what was so exciting? We got to the golf course. There was no one there, so we didn't have to wait. And I
I
know
bet you
why
didn't.
now. So keep in mind, if I wasn't 20 years or 25 years younger than I am today, I wouldn't be talking today because I would have had a heat stroke and died. But what I found interesting
Right.
is most golf courses throughout the United States, they have beverage carts, which, this course did too. But in addition to a beverage cart on every hole that we were playing, they had in the back of the cart ice down towels to wrap around your neck. And
Wow.
so you wrap that cold towel around your neck, and by the time you got to the next hole, it was dry and stiff. So you had to pick up another one. But that was a memorable experience, which I hope to never experience again
Right.
in the
Yeah,
middle of summer.
yeah, out on a golf course with no shade, virtually no shade, golfing, that just in 110-degree sun is no good, right?
No, not
Yeah.
at all. But
Yeah, you gotta have a pool. A pool is nice there this time of year, though.
you
That's the
know,
thing.
it is. And something else I quite often think about daily, hourly is, we have what, 4 more months, 5 more months of this. And then we get to enjoy the 70-degree weather, which you just got to this weekend for the following 5 to 6 months. So
Yeah, well, we're
anyway,
experiencing 30 below zero. So, yeah,
exactly.
yeah. Yeah, that's when I'm coming back out there, is during that time.
We have a lot of listeners and a lot of clients that are snowbirds. Kudos to you. Some of the most
Yeah.
brilliant people because they get out of here now while it's so hot, but they come back when it's 65 to 70. So
Yeah.
um, I love that plan. I always tell my
It's a good
clients
one.
that I'm going to be a snowbird advisor. So you can see me
That hasn't
live.
happened yet, though.
Not yet.
You love it there.
I
You
do.
stick around most of the time, that's for sure.
Yeah,
Unless
I
you're at a
do.
financial conference in Colorado.
That's right. And
Yeah.
that would be better. So,
Yeah. That would have been good. You didn't quite make it this year, but there was a conference recently in Colorado. I know you were sorry you couldn't make that one, but you've, been there with the family, and you and Shelly and the family doing good. That's great. Now, as far as the topic goes, tax rates might go up in the future, I hear.
absolutely. And what we're going to talk about, taxes may soon rise, and here's what to do.
Yeah.
And we've talked a lot about this in the past, but want to be a little bit more specific on what passed back in 2017 and what is about to expire December 31st of 2025, which is what, a year and a half away.
Yeah.
And the Tax Cuts and Jobs Act of 2017, which Trump put into place and cut taxes for everyone,
Yep.
including middle class,
Yes.
is going to set to expire at the end of next year. However, anything's possible. Congress, Tony, could extend it.
They
Mo-
could.
but, Arizona in the summer could be 65 degrees too.
Right.
At 2 o'clock in the afternoon. I doubt it,
Doubt
but
it.
what
Yeah.
we're hearing from almost every expert throughout the country, and
Yeah.
also tax experts that are out in Washington D.C., is most likely what's going to happen is Congress is going to let them expire.
Yeah.
And what does that mean? And how much of an increase should you expect if and when those expire and they don't increase thereafter? And that's kind of, we're going to go back in history a little bit. Before the Tax and Job Act passed, if you would have looked at the top tax rate, it dropped from 39.6% to 37%. So, a couple points, right?
Hmm.
Then the 33 dropped down to 32%. The 28% bracket reduced down to 24, which
Yeah.
a lot of our clients fall into today.
Yep.
Then 25% dropped down to 22%, and then 15 to 12, and then 10% being the bottom bracket.
Yeah,
So,
that didn't change, yeah.
no. So, with all that said, it doesn't sound like a huge drop, but if you put that to a percentage, in some
Oh,
cases, that's 20 to 30, maybe even 32, 33% decrease in what we're going to be facing most likely in January of 2026, unless Congress intervenes and steps in, is we're going to start seeing that increase. And
yeah.
what we're hearing, Tony, is it's going to be a continual increase, if you will, throughout the year 2030 for many reasons.
Yeah, and that
And
means if you're in one of those brackets, your taxes will go up at the end of 2025, unless, of course, like you said, Congress takes additional measures. But with the federal budget deficit just skyrocketing and the U.S. debt skyrocketing, I don't know
yeah,
how they could not go up. The experts say they will. So,
absolutely. And let's touch on that just a little bit. I know we have the four, Tony, and I think this is important on why our tax experts believe, and why I believe with all my heart, we're going to see taxes increase. Look at our country today. You just mentioned it. Deficit. Right now, we're
yeah,
sitting on close to 34 trillion with a T in debt.
yikes.
But
Wow.
it doesn't stop there. Over 12,000 plus, maybe even 13 to 14,000 baby boomers per day this year are exiting the workforce. Over the next
Wow.
5 to 10 years, there's going to be an excess of baby boomers leaving the workforce. So, what does that mean? That means less taxes going
Right.
into our great United States of America. But it doesn't
Yeah.
stop there. A couple other things I'll share is, which was a big topic at the political debate, is illegal immigration. Being
Yeah.
here in Arizona, New Mexico, California, and
Texas.
surrounding Texas, we see this,
Hmm.
millions and millions and millions. And not to get political, we have a border problem, and I
Oh,
always
yeah.
talk
I think
about this.
everyone agrees on that.
And in my own opinion, I don't think anyone wants to fix it, to be
No.
honest. So what's happening is more and more people are coming across the border, a lot for good reasons. But when the government, which they are, steps in and starts paying Social Security, Medicare, and Medicaid, that money has to come from some type of source. And then lastly, if you Google, get online, any site, and Google Social Security, Medicare, Medicaid, almost every site online will tell you those programs are set to be bankrupt by the year 2033 unless Congress intervenes. And just to let you know, they will intervene.
Yeah.
Don't let anyone, you know,
They'll shore it
put
up.
you in fear.
It's the reserves will be gone if they don't do anything, but they have to do something. It's the third rail of politics, and this has happened before, right? And
That's right.
Reagan made changes to shore it up back in his administration, and they've made, I think, over 100 changes since Social Security started
Right.
in 1935 to keep it solvent. So they will make the necessary changes. It might affect, people who are young now. It might
Right.
affect their benefits.
True.
I don't see anybody who's currently retired being affected or going to retire within the next few years. But eventually, you might see a decrease in benefits or the age will get higher, right? They'll raise the full retirement age. So in order to get your full retirement amount out of Social Security, you have to wait probably longer, right?
Absolutely. And that's a conversation I have almost daily is, in my opinion, think about it, and you just said it. Uh, in the lifetime, if you're a baby boomer, if you're retired today, the foundation of our country was built from our parents, Tony, and our grandparents.
Yep.
That they were such a big part of making the United States of America such a great country. And still today, they hold the majority of the wealth. So
Yeah.
the government, Congress is not going to take away their benefits. However,
Right.
they will change over the next 10 to 20 years and be reduced for younger folks. So you have a combination of things going on we're facing as we
Hmm.
approach 2030, and the 2030s decade is the perfect storm, in my opinion. So, you know, that's why we spend so much time with our clients and with our strategic alliances, CPAs, and other tax people with our clients to really help them with this area. But another thing I want to mention, Tony, which was part of the Tax Cuts and Jobs Act of 2017, was the standard deduction,
Yeah.
which 14,600 for individuals now, 29,200 for married couples. That is increasing every year due to, inflation and the cost just to keep that up, which is good. But also, here's a negative. Here's a tax that people don't talk enough about. It's called the estate tax.
Oh, yeah.
And one of the things that were increased, which is the good increase, was the tax exemption amount. Currently, this year, the maximum of $13.61 million. So for a couple, that's a little over $27 million if you're married, is the exemption. So to break that down, Tony, for everyone, just to keep it simple, let's say you're worth 30 million. The exemption between husband and wife is 27 million. If the husband and wife die, they're basically going to have to, or not them personally, their estate's going to have to pay estate tax on 3 million. The difference
Hmm.
between 30 million and 27 million. And currently that estate tax today is 40%. And that's federal. Then I don't have in front of me, Tony, if you remember, is it 17 states or 13 states that have what's called a state estate tax?
Well, yeah, and so the estate tax exemption amount it's pretty high, but it could be even higher, but they might lower it again, and that wouldn't be good. And states like the state I'm in, on the state level, it's pretty low. So if you have if you inherit a family farm, you're going to be in trouble when it comes to estate taxes.
And a lot of farmers, especially in the Midwest, have been, have lost farms. You probably heard this saying, the kids lost the farm because they had to sell it just to pay the state taxes. And I went back and researched the history of estate tax exemptions. And like today, for a married couple, 27 million. Here's something else that you want to watch out for. And the reason why I'm bringing this up, I'm talking some big numbers, and most of our clients and most of the people I know on a daily basis aren't worth 25 to 30 million like you, Tony. You're an exception. So wouldn't that be nice?
Not true. Not true. I don't need to worry about that on the old co-host salary.
Yes. Wouldn't it be nice? We're dreaming. But January 1st, 2026, when everything expires in 2025, the estate tax exemption will be automatically brought down unless Congress intervenes. But if they don't, it's automatically going to be dropped to, we're hearing maybe 5 million, could be 3, could be lower. We just don't know yet. Most experts of ours are saying around 5 million, they believe. So what does that mean? Let's say your exemption's 5 million and your entire net worth is 10 million. And that includes your home value, life insurance, brokerage accounts, IRAs, personal assets. Then your beneficiaries, your estate will be subject to estate taxes in addition to all the other taxes that are out there. Yeah. The good news here in Arizona, there's no state estate tax like there is, you said, like in Minnesota, I know in Washington, Oregon, Colorado, I believe, Illinois. So
in Minnesota, it's 3 million.
3 million.
And that's terrible. Yeah, that's terrible. And the reason people think, well, people who $3 million that's a lot of money. You can afford to pay taxes. But if you're talking about a small business or a family farm that's been in the family for years and you inherit it, and with the land, it's technically on paper worth 4 million, but none of that's liquid, right?
Exactly.
It's a family farm. And so the only way a lot of times they can pay that is if they sell it. And with my farm, my grandfather passed, left it to my father.
Wow.
Who wants to leave it to me. But the problem is that farm has always been as his family since 1855. It was homesteaded. In 1855, no other family has ever lived there. My grandfather grew up there. My dad grew up there. I grew up there on the same farm, right? There's 2 houses right across the lane. It's the same farm, same address. So the problem is now, when my dad dies, unless I can live there and I'm actively farming it and I meet all these criteria, I'm going to have to pay. If it's at that time worth 5 million and the estate tax is 3 million, I'm going to owe taxes on $2 million, which I might not have in the bank. That means I would have to sell that farm that's been in my family since the land was established, right? So yeah, it's tough.
And you're just talking, Tony, estate tax.
I'm just talking state taxes.
Now,
I'm not even talking about the federal taxes.
Yes.
So it's states that charge you. You're fortunate to be in Arizona. Now, the problem with having that kind of rule in a state that's a farm state like Iowa or Minnesota, because there are so many family farms. But in Arizona, what if you inherit a small business from your family and it's been, your great-grandfather started this business and your family's built it up and whatever, and you inherit it. And you have to pay estate taxes and you can't afford it.
I know. And just look at real estate. I'm seeing this in Arizona, just not in Arizona, Minnesota, Colorado, California, many states where we bought our house in 2016 here in Arizona, and it's more than double.
Yep.
So it doesn't take much to start accumulating millions of dollars that are calculated for your net worth. And one last thing I'll add to this is, when you pass away, or in your case, parents, or we pass away, guess who's
Sure.
going to come in and determine the value? Probably the government.
The
Now,
government.
do you think they're going to give you a high appraisal or a low appraisal?
Yeah.
If I was
Yeah,
a
because
betting person, which I'm not, probably higher
since
on
they're
that.
paid from the amount of tax you'd have to pay,
Isn't that a
yeah.
conflict of interest?
It's a big conflict of interest. Yeah, yeah.
Oh,
So
so we've been talking a lot about taxes, increasing
yeah,
taxes, and then, of course, uh, I want to add that when you turn 73, and this will change in 2033 unless Congress intervenes, then it will be 75. But right now, the required minimum distribution age is 73.
right.
So if you have pre-tax money, IRAs, 401ks, SEP plans, simple plans, and any any type of those plans, now the IRS is going to require you to start taking money out, whether you want to or not.
Yeah.
Why? Because of taxes.
Yep.
So for the next couple of minutes, because we've been talking a lot about what has happened, what most likely is going to happen. What can you do to be proactive? And
Yeah, what can we do about it?
number one, and this isn't coming just from Brad Cooper Financial, but you need to align yourself up with a holistic financial planner advisor who has a team of strategic partners like we do. And there's a few companies out there, but the majority, and when I say the majority, I would say probably 99% don't. But you want to work with an advisor that can connect you with the best tax experts in the United States, the best attorneys, elder care planners, and the list goes on. We have that support for our clients, Tony. That's the first thing you want to do, is be proactive. And here's what I've realized, and I think I shared this maybe a couple weeks ago. You don't know what you don't know. You know, we talk
Right.
about we talk about this industry day in and day out. We know a lot when it comes to financial, taxes, estate planning, but everything my wife's been dealing with the last 3 years, recently got a kidney transplant, healthcare, I don't know what I don't know. I rely and
Right.
trust on those experts and
The
specialists
experts. Yeah.
for that advice. So that's the first step. Contact a person who deals with that daily and get an opinion on what you have, because I bet we are spending, Tony, the majority of our time with the help of our CPAs and other strategic partners planning how to start shifting money over in a very careful and strategic way on an annual basis to go from taxable to tax free. Then we get our attorneys involved. What type of estate planning can we do if you have high net worth? There's special types of trust. One being an irrevocable trust, where you can start sheltering assets and planning for passing that down to multi generations, and not to avoid taxes. What message I want everyone to get today, Tony, is how to minimize. I'm okay with paying taxes. We live in the greatest country in the United States. But what I don't want to do, and I don't want our clients to do, is overpay. The
Right.
laws and rules are out there. So let us teach you and educate you about how simple they are and what you can do to
Right.
be prepared.
Yeah, that's huge, and I think you wanna work with a trusted financial professional who's gonna look out for your best interests, and they are out there, but you need to find the right one who truly will look at the big picture and take, as you say, the holistic approach. And I'm not gonna name names, Brad Cooper, but I know a guy, and our listeners can give you a call because they can set up that no charge, no obligation consultation, meet with you and your team there, and you'll help them avoid costly mistakes, especially when it comes to taxes and tax
Right.
planning. You work with tax professionals, but you need somebody who's not just looking at your taxes like a CPA for the past year. You need to make sure you're looking at the role your taxes will play in your overall retirement and income plan with the current finances that you have and with your estate plan, as we talked about. You mentioned estate tax, you mentioned tax rates going up. But there are other options too that you work on, like you've mentioned in past shows, Brad, Roth IRAs and cash value life insurance.
Right.
There are options for tax-free income in retirement, so you don't have to be as worried about these things. Is that right?
Absolutely. And right now, Tony, I calculated here a couple weeks ago, approximately, give or take, about 67% of our clients will most likely be in a 0% tax bracket over the next 5 to 6 years. Just from the advice they're getting from us and our strategic partners and the relationships with who we have. One being Ed Slott, which is nationally known expert when it comes to IRAs, estate planning. And one thing I'll add is the way we have set up Cooper Financial, and that's one thing you will know when we first meet, how we get paid. But I can tell you, we don't charge by the hour, which we get criticized. We don't charge by the plan, which we get criticized. And most of our strategic partners will come in the first visit and not charge you anything. So
Yeah.
don't get that confused with lack of value or expertise. That's just the way we're set up. And I think a lot of it's our Midwestern upbringing where
Yeah.
you just want to help people
And
and
you're transparent about how
very
you
much
do,
so.
how you get paid, and what the fee structure is moving forward if they want to work with you. And I think that's huge. But at least get a plan in place or get a second opinion. And
Absolutely.
we're out of time for today's show, but
Yes.
let our listeners know how they can get a hold of you, Brad, to set up that complimentary, no charge, no obligation consultation.
Yes. So I really appreciate and enjoy all the questions. So you can contact us at financialarmorshow.com. Again, that's financialarmorshow.com. Feel free to ask a question, fill out your information, and request a no obligation free consultation. Or you can pick up the phone the old fashioned way, which we love. We have a special toll free number, which is 888 390 5277. Again, that's 888 390 5277.
All right. Thanks, Brad. Great show today. Good topic. And listeners, thanks for tuning in or viewing. That does it for today's episode of the Financial Armor Show with our host, Brad Cooper.
Thank you, Tony.